Hey, this is Mac with PriceActionTradingSystem.com, and this is Wednesday, October the 31st, and it feels like a Monday. It's kind of a strange day. I honestly can't remember the market ever being closed like that except around 9/11, so it was really a strange feeling. Don't know how it felt to most of y'all, but it did feel kind of strange to me the last few days. So. Um, and I did get some questions. Several people asked me if I traded another market or anything, and I'll just say I did not. Rather than trade another market, I I went and took the time off. I did some more. Actually, I came into the office every day, but I just took care of some other business rather than worrying about trading, and worked on the website a little bit, and worked with some new traders doing some other stuff. So anyway, hopefully you enjoy the time off. And if you did trade other markets, nothing wrong with that. But I like to use it for time away. I mean, when you get to looking at this day after day, week after week, month after month, year after year, it starts to get a little, it's nice when you get a break away from it. And I usually come back very excited to be trading again. And if you actually feel this, and I know some of you do, if you actually feel, how do I word this? If you feel anxious about wanting to trade, that's not a good sign. That means that you're trading because you like the idea of being in the market and it's new to you. Once you make it as a trader, if you're really making money, it gets really boring, I promise you. And I know you may say, no, not for me, because I used to say the same thing, but now it gets boring for me, and I enjoy the time away from it. So I can tell you without a doubt, if you feel that anxiousness to get here and be ready right when the market opens, and you want to trade every day and you hate when the market's closed, if you still have that anxious feeling, that's not a good sign for you. And that's all I'll say about that. And you may not agree with me now, but one day you'll look back and say, yeah, old Mac was right. And most of this stuff, I've been there, I've done that, so I understand when you tell me you're struggling, or you tell me how you feel or things you do. And really the key to this whole business is discipline, and just being disciplined enough to wait on the right setups, which it's support and resistance. And that may be a flat support and resistance, or it may be angled, and you can see where the trades were today. No doubt about where they were, all down this resistance or this support line right here, and all down this resistance line right here. And if you entered anywhere else, you still could have made money, but it was risky. And depending on which way you entered, anywhere but there, could have been very costly to you. So anyway, let's get into the trades. We haven't had a chart lesson for a few days, so I know a lot of you are probably eager to see, compare your trading today to mine, and I'll show you what I saw. And we definitely had a channel here, and I got some emails today, and just about all of you had your channel wrong, I believe. There was one guy that I've been getting quite a few emails from lately that has been struggling a little bit, and he had his channel perfect, and he really had all the trades right, except for I think he traded this one maybe and it failed, and I'll talk about that one in a minute. So to give you an idea why you might have avoided that trade. So let's start with trade number one up here, right around, right in here, right after the open. There's a nice short here. Notice all those. We had this nice trend down. Then we had this little two-legged pullback to the EMA, and then notice all those overlapping bars. Let me make this a little bit bigger for now. And you notice all those overlapping bars, and we broke higher, and I guarantee you some of you went long right there, and then it failed and closed down here, and it trapped everybody to the long side. And this is a second entry short. And this is another thing too. I get a lot of questions about doji, and there's very few times when a doji is a good entry. There are some times where it's a very good entry, but for the most part, they're not good entries because and let me explain this, that is a doji right there. And the reason that's not a good place to enter a lot of times is because a doji is nothing more than a 1 bar trading range. So it's the same thing as a day that's flat and looks like a trading range. I'm just trying to find it. It's the same thing as that right there, which that should be easy to tell. That's a trading range across there. You know, your highs are right across here and your lows are right across here. That's a trading range. Well, a doji is nothing more than that in 1 bar. And if you went to a smaller chart, you would see a trading range across there that looked very similar to that with a lot of bars. And so remember that. And what happens, remember what happens when prices break out of a trading range. They normally fail and snap back, even if they're going in the other direction. So the trend is down, and the trend always takes precedence too. So the trend is down right here. We have a little pullback. We go into a trading range and we break out and fail out of that little trading range. And so this is a good place to go short because it's a second entry short. It's a failed second entry long, and it's a second entry short. So it's a failed break out of this trading range. So that one's worth the risk because even if prices go up, and you don't really have this up here yet. I'm going to get to that in a minute. This is probably what you're looking at. Actually, you would have been looking at that right there. And you see, you know that's a trading range, so no reason to go long because the trend takes precedence anyway, and the trend is down. And then suddenly it ends in this doji, but it broke higher first, so it trapped a lot of longs. So if it breaks short, if it turns down now, it's a second entry short. And so there's enough reason then to risk that, and you see what happens. It takes on off. But notice how it doesn't go very far, and then it bounces again. But let me show you this. Once you got those two lines right there, you draw a trend line off that, and you got to be thinking maybe that's the lows because we bounced twice there. Then you just copy that line. You see that line is just a copy of that. Drag it up top. And so now, while prices are headed back up, you know where to be looking for a turn up here. And you can see prices got up here, and look what happened. You got all this overlap. It broke higher right there, failed again and turned down. So it's worth going short right there. And you can see, though, what happened. It broke out of there, and it snapped back and then turned down. So, if you want to play it smart, maybe you wait, and you wait till somewhere in here and go short, or maybe even here. But I think it was safe, based on the fact that we were looking for a trend line there, and notice how we didn't close really outside of that. That's a good sign that this trend line that I copied and drug up here is right. And so anyway, you could have gone short right there. Actually, going short right here sometimes is safer because you can put your stop right here, and you got a tiny stop getting above your signal bar. But if you wait till down here, then your stop really has to go way up here, and then you got a huge stop. And if you go with 2 points, you might get stopped out and it be on noise. So, and when I say on noise is sometimes, like right here, this thing broke lower, turned up, and went back up, and then turned back down. And that's just not what I call noise. They're running stops, and it's just regular market movement, so to speak. But the trend is still down. So keep that in mind. But you could have entered right here below those lows. When it broke higher, that's a failed second entry long. That's that's a trap right up there. We've already got resistance with this possible line down through here, and so that's a good place to go short. And if you got short right there, your runners should have been safe here, and you could have ridden this all the way down to the lows. Definitely down to here. This is where I always exit, is when you come down here and touch the trend channel line, and I actually exited off this green bar right here somewhere, so I didn't get it all. It got another point or so down there, but you don't want to be greedy. You don't want it to bounce like this and take off and you give all your money back. So or like that one right there. You once you get a touch, that's pretty good, and if it looks like it's reversing, then you want to exit. So I exited. Could have got another point or so there, but I'm happy with what I got from here all the way down here. It's pretty good. And there was an add-on right here. And let me show you that one. Again, we had two legs down, and notice that there's two legs, and there was a pullback. So if you wanted to be, and you had this little double bottom across here, let me show you that. Notice the crosshairs. You can see that there's a double bottom right across there. We ticked a couple of ticks lower and then turned up. So there's a little failed break lower that after two legs down. So that's a viable long, and you would have got just enough out of it to get a scalp. But the trend always takes precedence, and the trend is down. So that's not a good trade on a day like this. It would have worked, but it's still not a good trade. Your better bet was to wait on these two legs back up and see when it bounces off the trend line, and then you got a trend bar in your direction right there. Go short right there, and it was off to the races again. And guess what? Any runners would have been safe here again. Could have ridden them all the way down to here or even down to here, depending on how you played it. So another great opportunity. And then it was all down here. No reason to be going long right in here. It's getting too risky. And you really don't want to add a short this low, although it would have worked. The market was pretty weak at this point. So, but notice all this overlap and stuff. So it just really wasn't a good setup. You were better off to wait till you got something down here. I circled this one in green. This would have been the first long that would have been legitimate, simply based on the fact that we hit the trend line and overshot it, or trend channel line. This is the trend line. The one on the other side I usually call the channel line because it kind of sets the channel, and you can see that there. But the first opportunity to go long would have been this one. But this one's kind of risky. You got two overlapping bars here. This one's not, so going long right there would have been the first trend bar in your direction if you did want to try to buy off this. But generally you'll get another push down before it'll bounce. And then you did. You got another push down, but notice, and there's your trend bar, but notice that prices never broke above that one. Let me get that out of the way. And you can see that there you would have never had your trade trigger. So then you get some overlap, and it's way away from the EMA. It's down here overshooting this, and so I dropped a limit order right there, and that was a nice trade. And it went a little bit lower. It went about 3 or 4 ticks against me. But the best way to trade that would have been to wait for this bar and go long right there, because then you got a break above it, so your order's sitting there. It would have got triggered, and look, it was a nice, easy move back up. And so I exited all my trades right in here, and then I put on a long right here, and I made a good bit of money on the way back up here as well. So I like to do it both ways. But again, I say this is a trend day, and for people that aren't real experienced at trading, and especially if you didn't know where these trend lines were, you're better off just to wait and get in back up here. And so let's move on to the next one. Now here's a pullback to the EMA, but notice we've only had one leg up. Look how bullish it is. You got to wait for it to get back up here most times before you're going to want to get short again. And it did. It came up here and it finally touched right here and it turned down, and you got a nice bearish bar. But look what happened by the time you got that. You had 1, 2, 3, 4, 5, and this one's even in there somewhat. So you got almost 6 overlapping bars. Going short right there is not a very good thing because prices will probably snap back. And look what happened. They did snap back and then went lower. And you could have gone short right there, but it was probably better just to wait and see, especially when this bar formed and it was pulling back up, because now you're going to get a second. You're better off to wait on that second entry short, and there's where your second entry short occurred right there. And I got short right there, and then it started overlapping, and I got a little nervous. I'm thinking, but then I'm thinking, no, we're going to come back and test this. There's no break of the trend line, so I held on, and it slowly worked its way lower. But you can see the buyers are starting to get interested now. You got lots of dojis down through here. We're drifting away from this line. You got to figure we're probably still going to go down there, but we never made it back down to the trend channel line again, and then prices started rising. So that's your clue right here to be really careful about going short, because you're going to get a measured move most times. So if you measure the distance, um, go back and measure this move, or just measure the distance between here and there, and that's going to put the turn down way out here. And so that was that's a clue not to get short here unless you get a really good setup. And notice there's not a really good setup. There's, you finally got a trend bar here, but look, you got 1, 2, 3 overlapping bars. One of them's a doji, and this one actually was working up and down before it broke lower. So by that time you got 1, 2, 3, 4, and 2 dojis. So, and look what happened when prices broke below that. It just trapped everybody and turned up. So, but when it came up here, then you got kind of a measured move, and we're probably going to get a retest to the low. The problem is you don't always know where the retest is going to be. So, but you got to be thinking short here. And this is again, there's 2 overlapping bars, but it probably would have been better to wait. But that looked pretty good to me, so I went short right there, and you can see what happened. It went exactly 4 ticks, and then it bounced and turned up, and so I exited this one at break even. I didn't lose any money, but it basically just cost me my commissions on my 5 or 6 contracts that I entered with right there. So not a good deal for me, but that's what happens when you get aggressive, and it just wasn't a good entry. But let me tell you this, when you get 5 ticks and you turn up and you see that big bullish bar, and you really should have been thinking about a trend line by this point, it would have looked something like that right there. Then you really got to be thinking, hey, I need to reverse right here. So I went long right above that bar, and another easy, I got my money back plus some. I actually made some profit going on. I just scalped out of that one because it's a counter trend trade, and you got to figure, it's going to turn back down somewhere. But when it went higher there, I'm thinking, well, hey, we're going to test this high over here. That's what the market does. It keeps testing support and resistance until it finds either support or resistance, and then it goes the other way. And so you got to be thinking, if we got turned up from here, then now we got to be going to test this area. And if we get through that one, then we're probably going to test this area. And look where that one went on up, and it's testing this area right in here. So that's why I turned that one green. It was a short there, possibly if you wanted to take it, and you may not have, because there's 2 overlapping bars there. But that's what I'm saying. Just wait on the best setups, because if you try to get smart, which I did, I thought I was smarter than the market, so I tried to get short right there thinking I'm smart, and I got fooled. So, you exit, and I don't always recommend people reverse, but if you can read the price action fast enough, and we've bounced right off that trend line again, then you got to be thinking, hey, this is a breakout pullback now, and so we're probably going a little higher, and we did. We actually went a lot higher eventually. But now you kind of got a trend line working up, and look, we finally got a break. It goes and makes a new high, and then guess what? It comes back down, and guess what this is? This is the retest from the channel that we never got. It just took prices a while to get up there and find resistance, and then they sold it off, and really we spent most of the afternoon rallying. So, but there was a short right here, because again, you still got to be thinking this sell-off is coming. And so when you got up here way away from the EMA and had all this overlap and it broke higher, you could have gone short right there. But again, you got to keep your stop above your signal bar, which either would have been that one or that one. But I didn't like that because there's just too much overlap by the time that triggered, and they're all doji. So, but when it made a second entry long and turned back down, then I'm thinking, hey, especially that big bearish bar. So I went short right there. Actually, I went short right below that bar right there because we broke above it first and then turned down. And so I got short right there. And looking back at it, now I wished I hadn't have. Actually, it doesn't matter, but I missed this long because I was fiddling with this short, and it was a good trade. I got my scalp out of it, no problem. But I didn't get any more than that, and it came back and it took out my runners, and it rocketed higher. But if I'd have been paying more attention, I probably would have noticed that, hey, this is the first break of a trend line, and I would have been more ready to go long, especially above that big bullish bar right there coming after a break of the trend line. And you can see, I wasn't the only one that caught off guard, because you see that burst right there. That is caused by nothing more than a lot of trap traders. When you see that, and that's, used to back in the old days, I would have said, man, that looks so bearish. Why did that suddenly turn and rocket up like that? And the reason that turned and rocketed higher like that is because when this thing broke lower, everybody's looking to go short again, and they get trapped and they get tricked. And when it reverses, they all got to exit. Just like me, I had to get out of my trade. I had a runner still going, had to get out of it. And it starts hitting those stops of people exiting, and then all of a sudden people realize, hey, we're going higher, and then they start joining, and it rockets higher, and that's what causes that. But you see, as bullish as that looks, it eventually found resistance up here, and it wasn't long before it sold off, and we were all the way back down here testing these lows again. We actually, did we make a low? No, we made a double bottom. But that's good enough to be a retest. We could still go lower. I mean, this is overnight trading now into the next day, but that is good enough right there to be a retest. So we could work higher from there. So anyway, I've got over 20 minutes here worth. I'm going to back out just so everybody can see the full day again. But hopefully that makes sense to you. Hopefully you had a good trading day. If you didn't, hopefully you have a better one tomorrow. And we've only got a couple more trading days in this week, and it's going to be a short week. But if you just follow the price action, and again, sorry, I had a short interruption there, and now I've lost my place. It's been a few minutes. I think I was wrapping it up, but anyway, I can't remember. I was talking about dojis. For traders that are not real experienced, that are having trouble, just stay away from dojis. Stay away from them, and you'll probably do better. If you didn't get to enter here because you were waiting on because of dojis, then you had another chance to enter here, and there's no doji here. There's a nice reversal type bar. That right there is a reversal type bar. It's like a breakout, pull back, and then turn back down. So you could have entered there. You would have missed this trade, but it didn't go far, and it came back. And the best trades generally will be a trend bar in your direction, and not a doji. And just keep that in mind, and I think that will help a lot of you and keep you on the right side of the trade. And generally, whatever, like if this is your trend bar and you enter here, this is where your stop has to be above that bar. Here's one right here. Here's a reversal bar. If you entered there, you see it took a little while. It got kind of caught, but that's congestion. But as long as you kept your stop above that signal bar right there, which is the same thing as the entry bar, the bar that you enter below or above is the signal bar. It's the bar that sets up the trade, which is generally going to be a trend bar in your direction. As long as you keep your stop above or below that, if you're going long, you want it below that, but going short, it's got to be above that. And you see, you never would have gotten threatened on your stop, and you were able to get in that with less than 2 points. So just keep that in mind, and that will probably help some of you that are really struggling with the dojis, because there's cases where a doji, like right down here, I still call that a doji, but that's a reversal type bar. Notice that it traded way down here and then turned up and closed on its very high. Even though it still looks similar to a doji, it's more of a reversal bar. This is a sure doji. And notice this one turned, but it didn't close on its low, so that's not a good sign. But notice this one, it's got the big stem and closed on its low. That's better. And you can see that one moved on down a little bit, even though it did pull back again. So just keep that in mind. Stay away from the dojis if you're having trouble with them, and concentrate on getting a trend bar in your direction that comes off a strong support or strong resistance, and you will do well, or you'll do better anyway. So I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.